What's up, everybody? Welcome back to TikTok by the Investing Circle, where we talk all things financial freedom and making your money work for you. Today, we're talking about house hacking a duplex with an FHA loan. Now, I've been an active real estate investor since 2015, and as a small-time investor trying to build wealth in a portfolio, investing in real estate has never been more challenging or really confusing. Rates are going up, prices continue to rise, and yet sales have gone up. What? Right. So, getting started in real estate investing wasn't the easiest thing for me, and I think I have much more of an average story, like other investors getting into this game without much direction. My parents did own our house growing up, and I didn't really explore real estate investing until I was well into adulthood and had saved my own money through a solid W-2 sales job. I was fortunate to get into the real estate investing game when rates were around 4.5%. I know that's hard to believe, and the median price was under the current median price of $416,000. I was targeting multifamily properties that had room to grow in both rent and value. I was able to refinance as a rate and term as well as a cash out refinance to waterfall my capital appreciation into other properties. This process is a bit more challenging, especially right now, but markets do stabilize. Now, that's all based on historical patterns, which means properties will be within reach again if the investment companies don't buy them all up. Now, because of the macro environment, my assumptions on the market, and other opportunities to invest, I've paused my investing in real estate properties, and I'm still purchasing REITs. This just means I have more time to share what has worked in the past, techniques I'll be using in the future, the wins, and the very real losses. This will be a multi-part series to my investing journey, and we'll be getting started with my third property and the creative financing done to acquire it. I also was honored to have a piece done on this property by Realtor.com and Brooke Morton, which I will put in the description. Now, the first thing that I want to talk about is identifying the property and actually matching the budget. Remember, we're talking about house hacking a duplex with an FHA loan. There are a lot of different blueprints for a lot of different ways to find a cash flowing property, if that's even your goal for investing. This is what I looked for when searching for this property. I had a specific budget I was trying to stay under, knowing I was going to also live in this property, house hacking, as most call it. That meant I could stretch the budget a little bit because I was going to use an FHA loan, allowing me to place a lower down payment, and I'll talk about the different lows later in this series. The budget also limited the area since a Motel 8 budget isn't going to get you the Ritz kind of property. Though purchasing other properties, I also had an idea on what year I wanted. Now, the financing portion of this is FHA, Federal Housing Authority. I've used only conventional loans and FHA loans so far in my investing journey, and this particular property was purchased with an FHA loan. These are designed to help people buy their first home, but it is a popular choice for investors that are going to also house hack and live in the property. The main benefit is that it allows you to put as little as 3% down, with the catch that you'll see a mortgage insurance on your payment, and it has to be your primary residence for 12 months. This made sense for this particular property because, one, I was pulling income from a cash out refinance, so I had a certain amount of money I could invest. Number two, I wanted to get more cash on hand for potential repairs, which I did end up using, especially on the roof. Three, I was going to be living in it. And four, for the price I was getting in the rate, I believe that I would have a chance to refinance to remove the mortgage insurance, which sure enough I did. Now, here are the actual numbers for this property. The purchase price was $300,000. The seller credit I got was $5,000. Interest rate at the time was 3.75%, and I did not have to buy that down. Mortgage insurance monthly was going to be $203. My cash to close, which is the big piece here, for a $300,000 property, cash to close, including down payment, $14,306. My mortgage payment was $1,697, and then rent for one unit at purchase was $1,250. That means I was only paying $447 for rent, not counting utilities, and once I could rent the unit out, I would be cash flowing. My annual gross income for the year I purchased this property was $37,000, being between two different jobs. Now, the big question to all of this, the hard money series, could this work now? The short and honest answer is yes. I would do this only if the cash flow made sense for me, and that's where this becomes an issue. The big challenge here, finding a property that does cash flow with current rates. While rents have increased, so have average payments and the cost of the property. Now, this is sharing the blueprint that worked for me at that particular rate. Doesn't mean it's not possible right now. It's a little more challenging. Now, that's all I have for you for part 1 here, how attacking a duplex with an FHA loan. If you've got any comments, please leave a comment in the comment section below. And if you want to hear something else about the series, or maybe adding in a comment or question that I could use later on in the series regarding real estate, please let me know. Hope you all have a great rest of your weekend. Bye-bye.